All right, all right, all right. Let's see if we can get this thing started. What's up, everybody? Welcome back to another Friday, another closing week. We closed out the month of September. We're going to jump into this. Want to do a live stream this week because, September was a very interesting month. We're looking right here. If you look at the year, what was it? The last bearish month that we had in the stock market overall was January. Now we have it in September. Statistically speaking, it was supposed to be a bearish month. I've been talking about it since that jobs report that happened on September 3rd, was it? Which was basically the very top right here. It happened before the open on September 2nd. It was a Friday. So, yeah, it's been an interesting month. A lot of people that got used to this thing just kept on going up and up and up and up and up. And, well, it pulled back. If you are joining, give me a thumbs up, thumbs down. Let me know if the sound quality is good on YouTube as well as TradingView. Just want to make sure on my portable equipment right now. And as long as everything's going good, we're going to get into some of the topics I want to talk about. If you have questions, feel free to ask me in the chat, either TradingView or YouTube. If you're catching this later, if you're watching this later, then want to plug my social media, Discord. I run a Discord. I don't charge anybody for it. I welcome people to come and talk about trading. There's people trading there every day. There's not that many. I wouldn't say there's no rocket emojis, but they're serious traders, professional traders, people that actually have goals. Yes, we'll talk about meme stocks, but for the most part, we are looking for people that take trading seriously and have a passion about it. All right, thanks for the confirmation. We're good on the sound. And thanks for joining us. All right, so let's just take a look at the markets as they are, the high points of it. So basically, the market as a whole today, to close out the week, we retested this low right here. Now let's bring up Ichimoku right here because I use Ichimoku to be my broad technical analysis sentiment tool. And so what I'm looking for in order for this to be true bearish is for both price and momentum, the Chicago, to get outside of the cloud. And that hasn't happened yet. So basically we are getting price out of the cloud. It poked its head out yesterday, came down, broke this low. You know, I was actually watching to see if it would break this low. There was something about this week's moves that made me a little uneasy about us retesting the high. But I wasn't going to say that if we broke this low, that's going to be a breakout. And this kind of is why I look for this confirmation when I'm looking at Ichimoku to analyze trends. You want to wait for price and the momentum to get out. That's your confirmation signal when you're using this as an analysis technique. So you have to have both. You really needed to have both to say that it's going bearish. Someone in Discord asked me about Ford. Now Ford is another stock where this is actually bullish, where we have price coming outside of the cloud and momentum coming out as well. And so they asked me, the question that phrased to me was, is this an entry signal? What I would actually like to see for an entry is if we're doing this as, let's say, a breakout order, then we want to look at where price came outside the cloud. Yes, it's come out now. I would actually look to take, let's say, a trade if we break this high, the high that we made on, I believe, Monday of this week. So some trade on a breakout would look something like this. Depends on how much risk you want to give. If you want to be really conservative, then size your position so that you can maintain this last recent low right here. And then, of course, if you do that, then you're going to have to bet on Ford going up to higher high this year. Let's jump up to the time frame. It's bullish coming off of 2020? What about the really long time frame? Well, it gets a little choppier here, but that could be reasonable to come and retest some of the highs that it made in the last decade. So yeah, you could possibly get it up to maybe 18, and that would give you a pretty fair risk to reward on that breakout. As you see here, also on the monthly, it's finally getting back above the cloud again. So that's a good example in forward. What about Bitcoin? Yeah, let's look at that, because Ichimoku is based on 50%. The red line is the 9 period 50%. The green line is the 26 period. And it's really cool how in July, the summer months this year on Bitcoin came down to hold the monthly Kijinsen. So, I mean, this thing looks bullish still on the monthly. Again, let's just use another example. I want to kind of put this in y'all's head about how you can look for price to get out of the cloud with momentum getting out at the same time. So momentum is still not clear. When I say I want momentum to be clear, I'm talking about this area in here. So the price is getting above the cloud here. This was in the end of 2020. So let's just hit play. Let that go. So this is the monthly. I know nobody wants to look at the monthly. There, right there. When you finally got both this and this clear, now you were set up where Bitcoin could actually run. It's really just that simple. Does it work 100% of the time? No. Technical analysis doesn't work 100% of the time. I got something funny about that here in a bit. But let's zoom down a little bit more and do a little analysis here. So weekly. The weekly is, give me my cursor. There we go. Weekly is still consolidating. I really can't say one way or another which way this is going to go based on the weekly. It looks like it wants to come back up and retest the highs. It's riding up the cloud right here. What I was watching for on the daily, again, was that signal where we would get price possibly below the cloud here and momentum below at the same time. Well, did not happen. In fact, Bitcoin held the daily cloud here, and so now it's making a run up. BTC 44. I'm not sure what that means. You mean 44K? I don't see why there's nothing really that tells me why it needs to come back that level in particular. I suppose if you were looking for a retracement of this move up, yeah, 44 could be a level that you could look at. And it's actually a good level because it was the retracement of this down move. So if you got that, that could be a very good support level. I like that level. That would be worth taking a trade or looking for an opportunity on it. So yes, I like that. But you know, there was some bullish news in Bitcoin, and there's bearish news. This is just crypto. It just moves double-digit percents in a given day. That's what it does. One thing I looked at right here today, came across that Biden is talking about. Now, he's talked about doing a lot of things. He's one of the best libertarian presidents we ever had because he talks a lot and doesn't really do much. Talking about regulating stablecoin issuers as banks. You know, if you watch some of my videos, listen to some of my live streams, I'm not big on regulating Bitcoin. I think that the intrinsic value of cryptocurrency is the decentralized nature. And anything and everything that is done that degrades the decentralized nature of Bitcoin erodes the intrinsic value. I hate to hear a lot of these boomers talk about how, oh, Bitcoin has no intrinsic value. It does. It's the decentralized nature. But people need to understand that and take that to heart and stop thinking that regulation is going to be a good thing. It's not. Regulation would bring around central authority, governing authority. In other words, if you have regulators that are dictating how cryptocurrency is run, it loses that intrinsic value of being outside of their ability to regulate. It's just that simple. So soapbox off on that. Let's go back to the actual market, because this week has been interesting because, or last few weeks, the whole month has been interesting because what you basically had was a pullback, a 5% pullback that we've been looking for all year, pretty much. This is a 5% pullback here. The market statistically has 3 of these per year. So when they happen, don't get upset, don't get frustrated, possibly look for some opportunities because they can be bountiful. I mean, there are a lot of stocks that have been pulling back. Tech, namely, QQQ, QQQQ, 3 Qs, has pulled back a lot more, actually. I mean, it was so bullish, but it's doing pretty much the same thing, pulling back to the Ichimoku cloud right here. But a lot of the big favorites, like Apple, have done a major pullback. I mean, don't be that surprised when Apple does a pullback. People get used to things just going. What about Google? Google doing the same thing. Everything's pulling back to this daily cloud. You notice this pattern where you have this big long trend in just about everything, and it's pulling back to the cloud. Now, as long as the momentum stays above the cloud, I'm still going to call this bullish. And then this was just a pullback. Momentum's just getting into the cloud here on Apple. So while this has been quite a pullback in the grand scheme of the broader trend on the daily time frame, it is just a major pullback. That's it. And that could change as the weeks go along. A lot of people talk about how October is a scary month. Well, I mean, that's okay. That is basically superstition. I mean, I was looking at an article for the live stream today to talk about that. So the reason people are superstitious about October is because there's been several major historical crashes that happened on these days. The Panic of 1907, Black Tuesday, Black Thursday, Black Monday. Not a lot of black days there. That was, of course, the great 1929 stock market crash, and then Black Monday again in 1987, which was a big deal for a lot of the boomers that started trading back in the 80s. But let's see. The October effect is the perception that the stock market decline is a perception. It's more of an anomaly. Let's see. What are the actual? Does this article go into the actual statistics? Let's do a search here. Because September did have a statistical expectation of being a bearish month, and so sure enough, it did. How about look at this? See, I should save that stock market. There we go. Okay, let's take a look at this. That's through 2019. October, yeah, again, close enough. We got 2 years here that we don't have data for, but September, statistically a bearish month. Sure enough, it did. October, statistically a bullish month. But look at this also. November and December. What we could be going into is the Santa Claus rally. Now, that's another phenomenon. Doesn't always happen, but generally speaking, quarter 4 is a good quarter for the stock market. I was actually reading something about, let me see if I can see. What about the Bitcoin statistics? I like these statistics. They don't always guarantee things are going to happen. They're just statistics going back, aggregated data. But they're a good guideline for seasonal patterns. In other words, last month, September, we knew going into it, it was going to be a potentially statistically bearish month. Sure enough, there were multiple short-term short setups that you could have taken. There's a lot. So if you had a bearish idea going into September with an open mind but a bearish sentiment, you could have found these opportunities and been carried like a tide of bearish momentum. That's how you kind of use it. You don't want to just short it or buy it on the first day of October because you know it's a 0.92%. But you want to be aware of these statistics, and so that you can have this idea going into it and then be able to find opportunities, knowing that there could be a possible tailwind pushing you along in your trade. Bitcoin statistics by month. Okay, yeah, you can have some cookies. I was looking at that. Hold on, give me 1 second to pull up. There is. I'm looking for the statistics. We keep this. I just saw them today. I can't quite remember where they are. Let me check my Discord, see if I posted it in there. There was a nice heat map that showed the statistics of Bitcoin. That heat map that I was looking for. Ah, here we go. Is this the one I'm looking for? So this was 2 years ago. This is what I'm looking for. This chart right here. I wonder if this guy has updated these. And spoiler alert, the historical performance of Bitcoin is going to be weighed to the bullish side. Let's see. So, okay. Well, can't find that. I'll see if I can post that to the Discord once I find it again. So, statistics are fun, basically. Okay. Oh, you know what? I didn't even share my live stream. Well, no wonder nobody's on it. Hang on a second. All right. Okay. So, for the folks that are on TradingView, thanks for being patient for that. Got any charts for me to look at while we wait? I want a few of my Discord folks to stream in. So, Al Razine. What collapse do you think is going to happen exactly? Because I hear a lot about collapses. I hear a lot about crashes. People love to talk about crashes because they get a lot of attention. They get a lot of attention, the crashes do. Actually, this week, someone posted this. Oh, not that. So, this is from Robert Kiyosaki, the famed Rich Dad, Poor Dad author. Does a lot of financial advice. Basically tweeted earlier this week, there's going to be a giant stock market crash coming in October. And his reason for this is basically, well, that the Treasury and the Fed are having, why Treasury and Fed short of T-bills. Gold, silver, and Bitcoin may crash too. Crash best for bargain. I get really tired of these. And the reason I get really tired of these is because people want this to get attention. Now, his job is to sell books, sell his education. I'm sure he's made a lot of money. He's also got real estate rentals, all that kind of thing. But maintaining relevance is the issue. And so what gets me is that basically these experts have predicted something like 50 out of the last 10 crashes. In other words, every month they'll come out and say the market's going to crash. And then the one time that it does, they get to gallivant around for a year or so. So like, I called the crash of 2021. And it frustrates me as a real trader that watches the market on a daily basis, that I can look for specific setups, like at the beginning of the month, where on the jobs report, we had where's my spike? Where's that jobs report spike? Right here. This spike at the 8:30 jobs report, which was the all-time high of the market, that is the high. At the high, using an indicator, not a fancy indicator, just something that showed me where there was a big price spike, I was able to say, okay, the month of September is statistically bearish. Here is a risk-defying entry. Let's go. And now, once that you have the month of September playing out and it's down, in other words, we can't go back in that. Let's do SPY. So being able to say on this day right here that we're going to go down for a potential correction, that takes some boldness. Being able to say, oh, we're going to have a potential correction when the market is doing this, you're just playing into what everyone's already thinking. And you're not going to make any money that way. So I don't really care what they say or what they think. So, NASDAQ, well, let's see. Is that going to be the QQQ or NASDAQ 100? Okay, the futures. What are the futures doing? Looking pretty much the same. Let's look at Ichimoku on this. BTC will go down. I'll circle back with BTC here in a second. Again, NASDAQ hit the bottom of the cloud. Momentum is still above it. What we have here is a major pullback. That's it. I mean, anything could happen, but as long as price maintains above the cloud right here and momentum does not get out at the same time, this is still trending bullish. You can't expect things to look like this every single day for the rest of your lives. No. At some point, you have to have a healthy pullback to get some of that bullish, crazy momentum going. Otherwise, here's what happens. Here's what happens if you don't get a major pullback. This is back in the market of 2018, I believe it was, because what really struck me about this year 2021, was that it looked like the period of time from 2016, which is back here. This is, this is right at the Trump election, 2016. Everyone thought Trump getting elected was bearish, but nope, pretty bullish. At least the market said so. And then we had this post-presidential run for almost a year. Did it have pullbacks to the cloud? Let's take a look. Yes, it did. It had multiple pullbacks, but as long as it held the daily cloud, still bullish. And if you don't have a major pullback to the cloud, well, and you get far, far away from it, people are sitting there thinking, oh, well, no, it's just going to go on forever. I got to buy. And you get this crazy, super bullish, hyperbolic, parabolic move up, which can only end one way, in a major disaster. It's not as exciting But it's really better to have this nice, steady wave as price goes along. Otherwise, you get this over exuberance, and that can only end one way. Same thing happened, segue back into Bitcoin. So again, you had this big move up, boop, 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 and then eventually something has to happen, and you have a major dip. This scares a lot of people. It's just the nature of price action. So BTC will go down. Let's see. Well, honestly, here's my broad perspective on Bitcoin, Ethereum, everything else. I did ETH short from 3090. My liquidation is 41.28. Will I save on not? Please tell me. So here is, okay, so your liquidation is at 41.28. Yeah, buddy, you're running a dangerous game here, because what I'd like to see for you in this trade is for you to have your stop or your liquidation point actually above the high. You've got it at 41.28, so you're going to get above this last high. But to be really safe, I really want you above there, but we'll see. What you have going on right now in the major crypto markets, I mean, there's Bitcoin, Ethereum, what I consider Monero, Cardano, everyone's been very big on, Litecoin. Notice what all of these major dinosaur legacy ones. I don't really focus on the cryptocurrencies that I have to put in 5, 6, 7, 8, 10, and 12 zeros. I don't have time for that. So what you have is crypto, the big ones, Ethereum and Bitcoin. Bitcoin made its big high. What you have it doing now is trying to make a run for a retest of that high. Retest means it's just going to try to get up there. Retest and break means, well, then everyone that thinks it's going to the moon can be happy. But price is recovering from the May dip. Now, a retest does not mean that it has to hit the exact high. It doesn't mean that it's going to get all that close to the high. It's just making an attempt. Right now, based upon the weekly, the longer term perspective, I would still say that this is trying to make a run up to here. The first place that I would look for there to be resistance would be basically the halfway point of the reaction level, somewhere around 56. Okay, if you get to 56, I would consider that a pretty standard retest. Then you get into this zone right here. From here until the last all-time high, it can play around there. We'll see. And then, of course, if it breaks a high, you get 2 bars that close above it. Now you have confirmation to go up. So that's the bullish case. That's what I'm looking for on the bullish side. Now, the flip side is if this retest fails. And let's just take away Ichimoku and let's just look at it from a pure price action perspective. Let's use Ethereum as an example. Actually, let's look at something else. Another favorite, AMC. So AMC on the daily, I remember there was a friend of mine that was bragging about AMC. I don't know where he got into it. I think he got into it here. But when you had this major high, that was the big moment in June. See, wait, where's our January? Oh, this was, okay. We'll look at GME in a second. What I want to look at is just what happens after you have a major high and then a failure of a retest. So basically, when you have that big come off the high, it got to here and then did not retest that high. It's simply a lower high. Be mindful of that. You really, in order to buy into it again, you really want this thing to be going higher. And if it's making a lower high, that can be a very dangerous situation for this right here. Now, you got a little bit of recovery here, but I mean, it's just not going up anymore. GME, that's another case where you had people were still very, very excited about it. You had this second run up here in March, did not make a higher high. Again, did not make a higher high. And now it's just going to pretty much just kind of hang around, and people are going to lose interest. And that's what I worry about for cryptocurrency in general, because you have this big high up here. We're trying to retest it. We're trying to make a higher high. But if we don't, it's not good. It's not good for it. Same thing with Ethereum. One of the things that I looked at for Ethereum that I thought was really cool was when I look at major highs, I look for that reaction level. Let's zoom in just a little bit more on this. And what I mean by that is when you make a major high, boom to boom, you want to measure that out from the first pivot high to the next major pivot low. And then that's going to set you up with a potential level to look for that retest to happen to. That's your first level to retest the high before you make a chance to break it. And what was really cool about Ethereum was, boom, it held that level right there. So Ethereum has, in my opinion, already made an attempt at retesting the high. One thing that Bitcoin has been doing as it's been coming along so far is it held a sell right there, a 50% sell, which it's also come back to again. And then in the short term, on the next leg down, it also held this 50% too. But again, I was not going net short because we haven't cleared that cloud. So what you're having here is the fractal nature of price action. Remember how if we look on the weekly, let's look on the weekly, and we have Ichimoku, and we have our run up, our major pullback to the cloud on the weekly, and now a retest of the high. Well, on Bitcoin, on the daily, we're doing something similar. We have the period of the summer where it did a lot of nothing. It finally launched off of there. We now have this pullback, and what's it doing? It's trying to once again retest the high. And it's come back to this reaction level right here going into this weekend. So it is at a resistance. So I'm not going to say the thing's bearish until we get price out here with momentum, the purple line out here as well. And so that's going to be what I'm looking for Bitcoin. Cardano. Well, here's the thing about any instrument. When I start getting text messages from people that I haven't talked to in years, saying that they heard about a certain thing from a friend, they want to know what my opinion is because they know that I trade, I tend to not be very optimistic about it. It's sort of like when your grandmother's calling you about a stock. If your grandmother knows about it and she's the last person to know about it, then she's the last person to buy it. And you don't want to be after her. So Cardano, let's see, what's it doing? Okay, so Cardano, I'm still getting a lot of messages about it. What this has done so far, being dispassionate, it is holding the cloud, and that matches up, of course, with the 50% retracement. So this run up we had from July until the beginning of September, again, this is a pullback. So maybe I shouldn't be so pessimistic about it, because what it's going to try to do is see if it wants to hold this level right here to do, again, a retest of the high. Now, the danger zone is, of course, in here, because the longer that it takes for it to retest this high, the more time it gives for momentum as well as price to get out of the cloud. And so really and truly, if you started seeing some movement in October, if you broke this low right here that it made in September, if it got below, let's say 190 in the month of October, then that's going to be a very bearish sign. But where I would look for it to go to in the short term, again, we have the major high up here. We could probably use this right here as a retest. So I would look for possibly, if I was looking for a target, I would look for a target 294. So that would be what I'd be looking for in Cardano. All right. Again, if you have any questions or things to look at, then let me know in one of the chats. Let's see what was on my agenda today. All right. Oh, I want to do trade review. I wanted to look at a couple of trades because it's been a frustrating month. I will not lie. There were a few trades that I took that worked and a few that didn't. One trade that I did take, I posted a few weeks ago, was, where is it? Delta. So this was on September 1st, actually. This is the very beginning of the month. I am planning on doing some travel, and whenever I travel, I take Delta. So that's my fundamental reason. I'm not going to look at the balance sheets. I just know that it's the best flying experience that I have. They fly out of Atlanta, so I'm always going to be using Delta, so why not own the company? Okay, that would be my fundamental reason. So I then go and look from a technical perspective, what am I looking for here? And that's why I drew out for everyone here. You have two 50% retracements coming together. Actually, three. Let's go through them each. So let's look at Delta and see how I structure this trade as I did. Don't need Ichimoku right now. We can use the retracement levels. So why I see this dotted line right here is because from before COVID down to the COVID low is the retracement level. And it kind of messed around at that level, but again, it's holding it. It's getting there to try to hold it. And that's what I was looking for here. Now also, there was a start of a trend from here to here, which matched up as well. Boom. And then on a lower time frame, what I wanted to see was, let's go to, I think it was a 2 hour. Let's remove my drawings. Right here in the short term, from this low up to this high, we had this zone right here. Where's September the 1st? Yeah, September 1st was about right here. So I was looking for a buy here. So what we have is a lower time frame, 2 hour, 50% retracement that is built into a daily 50% retracement that is built into a weekly 50% retracement in a stock that I want to own. It created a very good, where did it go again? Right. It created a very nice potential setup here because I knew where my risk was going to be. I knew that if we got below these lows, then I didn't want to be in anymore, whether I like the stock or not. But it did not violate that. And now I'm able to have a comfortable position as this goes up. It's weird. It is actually really weird for Delta to be going up because oil has been going up crazy. And I was looking at this week. So, you know, thanks for the tip. I appreciate that. Hey, thanks TradingView. So this last month, energy has been the dominant player. Energy has been definitely the dominant player. Tech, that's 200 days. I think it was 21 days. September 1st, yeah. Tech's not doing too bad, but energy has been rocking. So what's been going on? So ExxonMobil, this is a long-term dividend play that I've I've been big on this all year round. Great dividend yield on, let's see, Yahoo Finance, XOM. What is the dividend yield right now on them? 5.92%. That's really, really good. And you're also getting the appreciation of the stock price as well. So the energy's been doing very well. Another good trade for this month was VLO. Before I talk about that, let's talk about winners, then we'll talk about losers. So VLO was another 50% retracement from the low here set back in October all the way up to the high. Boom, smacked it right there, and it set up a spike on the 30-minute around this area right about here. Let's go to this point right here. So how I structure a trade around spikes, again, let me back up. 50% from the October low up to the highs. There's our 50% level right there. Okay, now down to the 30-minute. We have a short-term trend that started August 20th up to there. Boom, another retracement. So we have a retracement inside a retracement, a 50% within a 50%. Love it. And got an alert for a spike. And what this lets me do is this lets me measure out a trade. My stop is going to be below the low of the spike. This is a 930 spike. And I'm going to take a long position. Target can be here, or we can be a little more aggressive, but we'll just keep it 3-to-1 as it is right there. And when it hits the target, see, it barely missed my stop. Whew. Save there. Boom. At this point, I'm able to take off profit from the table, size down my position to what I call a portfolio size, no more than 5%, possibly less. And I'm able to hold on to that stock and keep it for as long as whenever, Warren Buffett style, because I've already paid for that position with this entry. Because I've taken the profits off, it's now a free trade, and it also lets me do something else. It lets me be a little more loose now about my stop. See, we had actually a bearish spike right there. Could have been an entry. A little scary here, but remember, I'm in a much smaller position than I was when I first got into it, because I've already sized down. So I can ride this out. I've talked about this in live streams and videos before. Etsy was a great example of that this year, where I was able to get into Etsy, take some profit off of it, and then when it made the major pullback, was able to stay within it. And so I'm able to keep that position as it continues to go up on this big energy run. Now, did I know Europe's gas prices were going to go up to 100 euro a barrel? I don't know what it is. I saw 100 euros something. No, but that's why you have to be in the trade before these things happen. You can't read the news and find out, oh, energy is going up. It's already happened. You have to be looking for these opportunities every single day and then take them as they come. And if they stop you out, that's fine. So let's take a look at losers. Now, Costco. This was a sad, sad day because, again, I had what I looked for. I had a 50% retracement here and then a spike right there. It got up to the 2-to-1, but boom, stopped out. And then I got an alert that it got to my target. Damn. But you know what? Here's the thing. Look at where Costco is right now. I got out of my position here. The stock has actually come all the way back down to below where I got out. I'm actually better off. And see, a lot of traders bag hold. And I'm sure you know who you are. I'm not a fan of bag holding. It just doesn't work in the long run. What happens in cases like this is, let's say that I took this trade in Costco and I saw that it actually worked out. The next trade, I would do something like it where as it goes down, I'm like, oh, I really like Costco. I buy stuff from them every week. I'm just going to hold this stock. The problem is I've already sized my risk up to about this much. This is 1 unit of risk for me. Now, if I let this thing go against me, let me move this around. Come on, come here. Yeah. 2, 3, 4 units of risk against me. Well, that's basically 4 losing trades that I could have put in anything else. And that's what I basically let it come down to if I would have held on to it. If I had decided I'm going to risk 1% of my account in this trade, then I would be now down 4%. That's not acceptable to take on 4 times the loss than you intended to do to begin with, even if it did come back. See, this lures people into a false sense of risk management. You have to stay disciplined, even if you have these really sucky things that happen. Because in the grand scheme of things, even if you would have backhold, look, I'm still down 4R. Instead, as it stands, I only took a single loss on it. There were a few others this month which did not do too well. I did not take these. There was Visa, which went against, and then I think there was Coca-Cola. Now, Coca-Cola, this is an example. I know someone in my Discord took this one. Again, it's a spike. It was at a 50% retracement. It fit the rules. It just didn't work. It's okay. It just didn't work. But this right here, what are we looking at? The trade here was going to give it about 36 points. 36 points on the stock. So 36 cents per share. We were going to give that as our risk. Instead of taking 36 cents of risk, there's now 272. You can't make money letting that happen. 2.72 divided by point, what did I say? 36. That is a 7R loss, 7 units of risk loss to bag hold this, waiting for it to come back for you. You just got to tell yourself it's not going to come back. I try to impress this upon people as much as I can because I've had to learn it the hard way. Oh, I learned it the hard way. In fact, if I go back and even now, years into this, sometimes I will let things go a little beyond. And sometimes I'll get rewarded. But more often than not, it's not a good thing. It ends up costing me more. You just got to take the losses. You got to take the punches and roll with it. And get back in there and find the next opportunity. And the market is always giving opportunities. This down move that we've had in the stock market, this pullback to the cloud, could be an opportunity. I'm not going to say it is, but it could be. This is what you're looking for, is these opportunities. I actually did not see any opportunities this week in particular that I liked in terms of spike trades. I looked every morning and none really fit my criteria. And so what that tells me is this week wasn't actually a good opportunity. And that's pretty good too, because I think a lot of people were trying to get into, this is the S&P 500 again, a lot of people saw this run up happening this week. And they thought that this was going to be yet another recovery that we've been seeing all year, where the market takes a little dip a few days, comes right back up. Dips, comes right back up. Dips, comes right back up. That's what people thought this was going to be, but instead, we made a new low. So this is how having a system and looking only for specific opportunities keeps you disciplined. If you haven't checked it out, I want you to go on my profile, and actually, thanks to the TradingView mods, they actually decided to give me an editor's pick. I talk about implied volatility and premium selling strategy. So a little plug for that. I want you guys to check it out. The reason I bring that up is because someone in my Discord mentioned, hey, I'm looking for stocks that have high IV rank and high IV percentile. In other words, I'm looking for stocks that have really high volatility. And he was looking at the beginning of this week, and there weren't that many. And that's interesting. Let's look at the VIX. The VIX is, of course, the measure of the volatility, of the implied volatility of the overall stock market. S&P 500, excuse me, the ETF. But we use that to gauge the market. It's interesting how at the beginning of, at the down move that we had, let's do it this way. Let's look at it top by down, because that's really what illustrates it best. So VIX on top, SPY on the bottom. What you will find is that it has an inverse correlation. Let me get this sized up. Where's that dip right there? Yeah, there we go. Boom. Okay. So when the market makes down moves, it's not coming up together. You know what I need to do? 1 second. This should fix that. Nope. Okay. My mistake. Okay. There we go. Now we're getting things lined up. I got to line up the monthlies so you guys can see this. Okay. That looks better. Yeah, now we got it. So on this move down right here, 20th of September, you had a major spike up in the VIX. Volatility spiked. Fear spiked. Options prices spiked. But even as we made a new low right here, the VIX did not go higher. And I find that interesting. It's not necessarily a bullish sign in itself, but basically the market is not pricing in much more downside. Now that can all change next week. We could go higher on the VIX as the market goes lower, but I just find that interesting. You want to look for these sort of patterns, these correlations between the VIX and the S&P 500 because it can be very valuable. There was a case back here in May where the market made a low here, May the 12th, and it was hitting, again, I used the 50%, a retracement level here because if you talk to people that trade volatility, they sell premium, they like to say that volatility is a mean reverting type of instrument. In other words, it likes to come back to its mean. And so it has this nature where it will find these retracement levels as spikes. And when it hits these, it can either be, in this case, it was a retracement of the November, basically the election volatility, down to the low volatility here. And then when we hit this low right here, even though it's a higher low in the stock market, it's interesting that it basically just came up and matched that level right there. Look for these to find opportunities. So again, how that segued into it, someone was looking for opportunities with volatility in this week, I believe right here, and they're not finding very many opportunities to sell premium. Volatility is just not that high, even though a lot of these stocks are down. And so it's not that your indicator, it's not that your rules are wrong. Think about it this way. Maybe your rules are keeping you patient for a real opportunity. That's how you should look at it. You don't need to take a trade every day. You just can't. It's just not healthy. So, see what else we got going on this week that I want to talk about. So I'll leave it on this joke right here. I thought it was pretty funny. Got posted to, I posted it in my Discord and I saw it on the Telegram. Is technical analysis bogus? I've thought about this a lot because I use it. I make a lot of money on it. I lose money sometimes on it. So what is it? And I think the uninitiated, when they first get into technical analysis, I think what we need is a flow chart of some sort. So let's just use the VIX down here. And I'll just do this for fun as we close this out today. So, all right. Let's say that we're a beginner technical analysis person. So, beginner technical analysis person, what they're going to basically say is one of two things. TA is awesome. And what they're going to look to do is they're going to try to find the perfect system. I'll see. This is all going to be what they say. TA is awesome. I'm going to find the Holy Grail. They're going to try to get a 100% win rate. They're going to do all these kind of things right here. And they're going to try all this. They're going to put 1 million indicators on their chart. And then there. That's going to be the steps of people getting into technical analysis. Now, they're eventually going to find out that they take a lot of losses, that the best setup, the perfect setup that they had actually ended up not making money, lost them money. They stuck with it. They bag held. And they're going to go in 2 directions. They're either going to go 1 or 2 directions. They're going to either go to the photo here, where they're going to say, it's just all bogus. Or they're going to go in a vicious cycle, hopefully not, where they try to add more indicators, that go down more paths. They go through this very vicious cycle of trying to find more and more ways to get back to where they, can I not bend this? I'm gonna bend my arrow. Okay, I guess it won't let me. Oh yeah, curve. I can make this happen. Yeah, circular. There we go. Scam likely. Or what they'll do is they will graduate. And what they'll find is that technical analysis provides them with technical analysis just gives them opportunities to take risk-defined trades. Oftentimes, if you're doing technical analysis, you're not even going to be right more than half the time. My personal success rate's about 41%. But remember, I'm always looking for that 3-to-1 or greater, and I'm letting profits run. So when people get into it and they say, well, you're wrong 60% of the time when you take a trade, that's technical analysis is bogus. You know what? Maybe it is astrology. But it gives me an alert. Like I have it set up in TradingView, like you saw beginning come up here, where I have these spikes that I look for. These spikes tell me when these price elements happen. And then I can go and look at it. And I can say, okay, well, it's at a level. I combine some technical analysis together, and it can be an opportunity. I'm not going to assume it's going to work, but I'm going to structure a trade around it. And then it may work, it may not. But all I have to do is get on base. All you got to do is get a couple of winners and hold on to them. And then cut those losers. That's really the game. But a lot of people don't want to take losers. I hate losing. But it's just part of the game. So, going to wrap it up here. Let's see. What do you see on the NVIDIA chart? I have the 1022, 210 calls. I bought them today around 206. What do you mean, Tatami, about third direction iron condors? Or are you just making a funny point? So NVIDIA is another example of a winner. They announced this. I got into this back in May, posted about it. We talked about it a lot, and it's been a great winner. You know, I was able to capture more than 3-to-1 here and let it run and make up for losers. It's been a very good winner. So I'm of course bullish on NVIDIA. I own NVIDIA stock, so disclaimer there. What do I think about a trade now at 206? Well, I like how you have this launch right here into a trend. I like this as a level here because you have the past. I'm just going to go through the full breakdown of it. You have this former, I think it was an all-time high there, which matched up with the 50%, and then it hit it here back on September 20th. I like that. That was good. That was a good launch, but you remember what I said at the beginning of the live stream. If you caught it late, go back and watch where I talked about cryptocurrency trying to make a retest of the high. This is a great example. Thank you for bringing it up. What happens when you have a major high? Let's clean this up. NVIDIA made a new all-time high here, pulled back, and then tried to retest the high. Now, a retest doesn't mean it's going to get there. It just means it's going to try to get there. And again, where I look for conservative targets is those reaction levels. It can be the middle of that consolidation. Ooh, it just barely didn't hit it there either. Yikes. So didn't quite get to that target there. This is a failure to make a new high right back here. I mean, I hate to be the bearer of bad news. I hope this works out for you. Anything can happen. But I would not have taken this second pullback here, because if it was going to hold, if it was really going to hold and be a very bullish trade, I would have wanted to have gotten it on September 20th. I would have wanted to be into here, because now at this point, you've broken this level right here, and you've actually got 1, 2, 3, every single day this week is, 4 days this week have closed below it. So you've really got to conquer this level right here. You got to get back in this territory. How much time do you have? 10:22, and you've got the 2:10 calls. So you took it in the money. I prefer out of the money calls myself, because when you're taking it, well, this was probably out of the money. Yeah, okay, it was out of the money when you got it 206. You took 210. Anything can happen, but from a technical standpoint, I would have liked it better if you'd got it back here. I know we can't go back and do it, but if I was going to take a trade, I would have taken it here. And this failure right here does not inspire me with confidence, unfortunately. So I wish you the best. I hope it goes well for you, but it's not one that I would have taken. So that pretty much wraps it up. I was going to talk about studying reversals, but I think I might make a separate video about that, because I've always got a little something in the pipeline, a little teaser for it. This is something that I have been working on. It's a hard reverse. That doesn't quite fit. I'll go into it later. So thank you all for joining me. Hope you have a great weekend, and I hope you have a great October. Look for opportunities. You never know when that Santa Claus rally is actually going to begin, and don't be superstitious about this being a 1987 crash. You never know. Thanks, guys. We'll see you next time.